Business News Now. Stephen Carroll is here, starting with Brazil and the economic challenges facing the new president.
Brazil is in the middle of the worst recession the country's seen since the 1930s. The economy is continuing to shrink in the last quarter and unemployment has shot up in the past 2 years. Those are the challenges facing the new President Michel Temer. Digging Brazil out of its economic downward spiral will be difficult and will require unpopular measures to limit public spending. William Hildebrandt has the details.
Well, some in Brazil may be angry Dilma Rousseff was impeached. Many analysts agree that for the world's 8th largest economy, the only way is up. Since Michel Temer became acting president in May, the stock market has boomed. Now sworn in following the Senate's vote to remove Rousseff, who is keen to remind challenges remain.
We have received a country mired in a severe economic crisis. There are almost 12 million people unemployed and a deficit of over 170 billion reals in our current accounts.
A deficit of 47 billion euros at a time when the country is suffering what could become its worst recession in over a century. Wednesday, the latest figures showed the economy shrank for a 6th straight quarter, contracting 0.6%. The country has been hit hard by collapsing oil prices, rising inflation, and political turmoil. And interventionist state-led policies help spark a crisis of confidence among investors. If Temer wants to get Brazil back on track, he'll need to restore trust.
In my opinion, this marks a new era of fiscal management in the country. An era characterized by controlling spending.
On top of his agenda are economic reforms, including overhauling the pension system and curbing a nearly record budget deficit that has sent public debt swelling to almost 70% of GDP.
Turning next to some economic data from China.
And there's good news in it, or so it would appear. An official survey of the country's manufacturing sector saw growth hitting a near 2-year high in August. That's better than had been expected. But a second survey focused on smaller and medium-sized companies painted a less optimistic picture of Chinese industry. Earlier, we spoke to our correspondent in Beijing, Paul James, about the significance of these figures.
When we talk about the Purchasing Managers Index, this is the survey that came out this morning, which talked about manufacturing. Surprisingly, it jumped back above the 50 level, 50 being the boom and bust line between expansion and contraction. Last month, it was at 49.9. This month, it's at 50.4. Most economists had predicted that it was going to stay below that 50 line. But when we talk about small and medium-sized businesses, an independent survey by a company called Caixin Media, which is not adherent to the government, saying the exact opposite, which is that the small and medium-sized sector is actually in decline. So what we're looking at is a question of parallels and a question of whether or not you want to believe the actual stats that we're seeing. One suggestion being that the Chinese government, and not necessarily the government, but companies that the Chinese government surveys, so the PMI surveys, wanted to give a good impression for the Chinese government ahead of the G20 summit, which of course is coming up very shortly here in China. And so perhaps they fudged the numbers a little bit, and we're seeing perhaps the other way. But on the other hand, the PMI figures that the Chinese government puts out are done on a broader basis and broader scale than the independent Caixin stuff. So it's hard to say at this point, but definitely the Chinese government will be looking at this as a way to bolster confidence ahead of this big G20 summit coming up.
Well, let's see how that news went down on the stock markets. Chinese investors not terribly impressed by that survey of the manufacturing industry. We are seeing some falls on the Shanghai Composite Index, down by about 0.5%, while the Hang Seng in Hong Kong is seeing some gains. There were contrasting picture coming out of Japan, though, where spending in factories and equipment there were down in the last quarter, less than had been expected, but the Nikkei in Tokyo still seeing some gains. Today in Europe, shares starting the day in the green, mining companies and banks leading the gains in Europe. Shares in the French drinks company Pernod Ricard up by 1% after they found that sales had improved from what they were expecting in China. Some more of today's business headlines for you now. Ireland's government is to meet later in an effort to resolve a dispute over whether or not to appeal an EU tax ruling over Apple's affairs in the country. The Commission ordered Ireland to recover more than 13 billion euros from Apple in unpaid taxes, but there are divisions among Irish ministers over whether or not the government should appeal the decision. The French telecoms company Orange is said to be in preliminary talks to buy a stake in Iran's biggest mobile operator. The Wall Street Journal says Orange is one of several European companies holding discussions with the mobile telecommunication company of Iran. And gambling revenues in the Chinese enclave of Macau rose for the first time in more than 2 years in August. Monthly earnings at casinos had slumped to 5-year lows as China's economy slowed down and the government there cracked down on corruption. But they were up by 1.1% in August after the opening of the $4 billion Wynn Macau resort.
And finally, Monaco, pardon me, you just
Close.
talked about Macau and now it's Monaco, is beginning an expansion into the sea.
Yeah, we know that Monaco is a very small place, but it's about to get a little bit more land as construction has begun to reclaim 6 hectares for the tiny principality on the French Riviera. The €1 billion project will create 60,000 square metres of housing, as well as a marina and a park. Now, that's good news for those looking to live in Monaco, because it is one of the most expensive cities in the world to buy property. $1 million will only buy you 17 square metres there, so a little bit more supply set to come onto the market.
Well, thanks, Stephen. That's even more expensive than living in Paris.
Sure is.
All right, Stephen Carroll with our business news. And